New vehicle sales over 53,500 in June, and that was up 3.3% compared with the same month last year. Sydney Soundy is head of vehicle and asset finance at Standard Bank, and he joins us now. Sydney, 3%. Is this good? Bad? What?
I think it's fair. If you look at year-to-date growth, we're looking at 6.7% growth. Actually, if you round it off, it's 6.8. So, in a sense, 7% growth year-to-date is not bad, given the state of the economy and the rand exchange rate as it is doing now.
Now, my feeling with new cars is that I can't believe that anyone buys a new car. So it is really discretionary. I mean, you can get an almost new car for a lot less than a new car. When you drive it off the showroom floor, they say it loses quite a lot of its value. But the number of actual cars, vehicles sold, 53,000 new, 37,000 new cars. Kevin, does this tell us that the consumer's better off than we think the consumer is?
No, it tells us we love cars in South Africa. Well, we are prepared to spend a fortune on cars relative to other stuff. So it is peculiar to the South African market, and as a percentage of we've looked at what percentage people are willing to spend of disposable income on a car and compare it with other countries. And it is extremely high in this country. Partly to do with the public transport system, in the sense that we don't always have alternatives, partly to do with how we express our wealth and our success, unfortunately. And obviously the car companies like it, and certainly in the top-end models there's some very good margins. What we have had as a theme that's played out, I think, over the last year, 2 years, Sydney would know better than me, is that you've seen a buy-down process. In other words, a lot of the growth in the car sales have been at the entry level, and people have looked for bargains. So that is a good theme that has come through, and they found that a number, obviously Korean makes, etc., have offered that. So there is a thought process that's going on here. But on the whole, we continue to spend, even though on other areas of the economy and consumer we're under significant pressure.
I suppose there are two elements to that we must ask. Certainly, the one is the repossessions. It's all very well to start going out and buying, but do you see that increasing? And the other side of it, the one that disappointed me, was exports, which seem to be pretty low and have gone down, which no one expected, particularly with the rand weak. One would have thought that we would have been able to export more.
Yeah, I think, I mean, if you look at the nature of the South African consumer and their interest in vehicles, to Kevin's point, we're sitting with just under 76% disposable income, debt to disposable income. So that's a big number, and out of that, obviously, a bond, a house, as well as a car are major aspects of that debt. And as we talk now, I mean, about 47.5% of credit active consumers records are impaired. So we're having lots of pressure on the consumer, and yet
we got this number from the National Credit Regulator. It came in a couple of weeks ago, and she told us that's the kind of it's nearly half.
Exactly.
But just what about David's point about repossessions? It's almost like insurance policies and lapses. You know, the lapses are as important as knowing what the sales were in the first place.
Indeed. So financial institutions are always very careful how they get into financing vehicles, like any other debt that we advance. So when you start seeing pressure in the economy, pressure on the consumer, even the tightening of credit actually comes into play. And I think we are at that stage now, given where the economy is, given where the consumer is, that we're starting to tighten.
I'm after a specific car. Can I give it to you so when it gets repossessed, you can actually...
Sydney, are we like... So this is 3.3% growth, which is obviously quite a big... Not a big slowdown, but it's meaningful relative to last month. We were growing at 7%. Do you think these numbers are going to slow quite a bit further in the second half of the year? And could we get into negative numbers at some point?
It's a difficult question, but I think the expectation is that growth in the second half is going to be much more subdued than what we've seen so far.
You also say, Sydney, that there's a lot of competition in the sector. We've got lots of models, lots of competition. So that's the number of units. What about for guys like you in terms of the value of these sales? Are you growing at 3% commensurately with the number of units sold?
So the number of units is growing, but at the same time, vehicle price inflation is also going up, although not at the same level as consumer price inflation. But as a result, given the number of volumes as well as increase in prices, we're also seeing growth in balance sheets. And so you'll see that in the competitive environment, even from a financial institution perspective, growth in the balance sheet is actually happening.
Well, that's all we have time for on the cars on Business Tonight. Thanks to Sydney Soundy. Just to talk about a couple of the shares there, David, what we've had, Oceana, we had going up 7% today. The gold miners, DRD Gold up 6%, Sibanye 5%. And Sibanye fascinates me because that came in at about 12, 13 Rand when it was listed in February. Went down to 6, went as high as 18. What was its value? It's now about 7. 8.
It's trading. You know, you're going to get massive volatility in against the kind of movement that we've seen in the share price. The gold price. You're bound to see this kind of volatility continuing. So I wouldn't read too much into it. You know, if you look at a major player in commodities like Anglo American, it's come all the way. At 230, we would say we were saying every week, buy. It went down to 190. That's a huge fall. So there's bound to be some kind of upward movement now. It's whether it's sustainable against this and whether we can make a real justifiable case, in terms of earnings.
Yeah, and it comes back to what we were discussing earlier on the show. That's why the PMI numbers are so crucial, because if you do get a pickup in PMI, it tends to then also talk to commodity prices. And if we did get into an environment, let's be speculative. Let's say the US continues to recover, Japan's data improves, Europe stabilizes, China's not as bad, then you start to see an improvement in commodity prices, and then some of these commodity shares will look much more attractive. And I suspect that's going to be the big call as we go further into the year, is whether do you believe that the world economic recovery is gaining some momentum? And I guess with the data out today, it looks a little bit better. And we'll look at the data to confirm that. I think it's still too early to call that emphatically. So you'd be a little bit cautious about commodity and commodity shares, but expect on a day like today, when you get slightly better PMI numbers, to get a bounce in some of those prices.
I think the worry, and to reiterate what Kevin's saying, the worry is that last week we had Anglo American coming out and saying they've appointed, I think, Goldman Sachs and Morgan Stanley to help them sell a share of their Minas Ria project, which is a huge project, an iron ore project. So once they're adopting attitudes like that, their outlook is a lot more subdued than we'd like to believe. So that gives you an idea of where we're going in the commodity market.
And I think a lot of guys have put projects on hold now. If you look at the investment plans that were around not so long ago, many of those have been scrapped. And guys are shedding assets, and they're trying to trim down portfolios and put themselves into better shape. But once you're doing that, it's an indication that the commodity companies are not as optimistic. So this whole sort of super cycle has definitely lost its flavor. And we've got to wait and see whether there's traction in, not just now in the US, but if there's broader economic attraction.
Do we look at a Cynthia Carroll in the light of all this and say, when she came in, she was, Tony Trayer at Anglo American was blamed for not taking more advantage of the super cycle, investing more to get more traction out of the demand. She came in and was made very clear, you've now got to do this. And in a way, was then punished.
She wasn't the only one. Tony Albanese from, he wrote off $14 billion.
Tom Albanese, yeah.
From Rio Tinto. Yeah. Marius Kloppers from BHP Billiton, 5 all lost their jobs. Cynthia Carroll. So all the top 3 firms, all the top 3 major diversified miners got rid of their heads, and billions have been written off, and I think it's going through the whole industry. So I think against that background, we've got to be very cautious about reading too much. I think we're in for a few years of subdued returns in the miners.
But through this process, you may find yourself in a better shape. In other words, these companies have got better assets, better quality assets, and ultimately, you've still got a massive consumer base within emerging markets that are going to grow and consume goods, and that. So this whole thought will return. I think we just
all a question of timing.
It is timing, and we're not in that phase right now.
Rather buy booze, cigarettes, luxury goods, but you got to get better returns out of those.
But doesn't it also raise the question of there was that great fashion for core competence, shed the non-core assets. Well, the trouble is that if your core assets are then vulnerable, you are vulnerable as a company. And the big diversifieds and the companies like Bidvest, which is its core competence is making money, starts looking a much better model.
They are, where we went wrong, I think, where the mining companies, is that we thought that this commodity super cycle would extend more than 10 years. It will go 10, 20, 30 years.
This time it's different.
Exactly. And what happened, we learned after 10 years, well, that's it. And China's now shifting its whole emphasis.
Kevin, last word?
Well, it tells you exactly that. So you've got to watch for what is the next pressure point that comes out of China, and that will be the move towards consumption and the move towards services. And how do you benefit from that move? Because that's going to be very substantial, and it's only just started. And maybe companies that are in that space, that are providing more of the service type goods or services into that world, will be the next super cycle.